In this video, I'm going to show you 5 ways you can use options to make money in Nvidia. I want to thank Steve, our YouTube viewer, for this question. I look forward to answering it for you, Steve, and for all of you watching this video. And at the end of this video, I'm going to ask for your feedback. I'm going to ask you which one of these strategies you'd like me to place the trade in Nvidia. I'm going to share that trade that you pick in Nvidia on my Patreon group, but I'm going to put it where the public can see it so everyone will be able to see it. I'm then going to tell you how that trade turns out. Before we place any option trade, we first want to assess the technicals of the underlying stock. So let's do that together right now in Nvidia. These are my 3 favorite time frames to look at when I'm looking to place an option trade. The top right one is the hourly chart, the bottom left one is the daily chart, and the bottom right one is the weekly chart. Now on our hourly chart in the top right, we see Nvidia is just kind of trading sideways. A slight bullish tinge, although today with the market just opening, looks like we might be having a little bit of a down day as you see on this candlestick. But overall, so far we see a slight bullish trend in Nvidia on this hourly chart. Now our daily chart here in the bottom left, we see a pretty nice bullish trend. Overall, we do have some higher highs and we have some higher lows. Now I did experience a lower low here, but since then it's made a new higher low here, and we have also made a higher high right in here. Now again, right now it looks like it might be a down day. Nvidia's down about 2.9% as of right now, so it could be a down day, but so far Nvidia is still looking pretty bullish. Now one more time frame I like to peek at, especially if we're going to trade longer time frame options like Leaps options, which is just simply options that expire in over a year. I'll look at this weekly chart over here on the bottom right. And again, we see a nice bullish trend on this weekly chart. Overall, this weekly chart looks to be the most bullish out of all of them. We're consistently making higher lows and higher highs. So that looks good. So overall, my assessment of Nvidia is, as of right now, I'd be bullish. Now, I'm not necessarily bullish because I think the stock is pretty overvalued right now. Let's just go strictly based on technicals here. Let's forget about fundamentals. We're just going to place a trade based on technicals with Nvidia. So what are 5 ways we could use options to potentially make money on Nvidia if we're bullish as of right now? Well, here's number 1. Let me back up real quick before I show you some potential trades with our strategy number 1. Before I place any option trade, I like to double check when is the next earnings announcement. Because unless I'm making a trade specifically for earnings, I generally like to avoid earnings if at all possible, especially on a shorter term frame option trade. So something to keep in mind here is that Nvidia is supposed to announce earnings sometime in February. It's not confirmed yet, but that's what Earnings Whisper is saying. It's supposed to announce it around February 19th. This could be right, could be wrong. It's not confirmed yet. Otherwise, you see a little check mark here, I believe. Just kind of keep that in mind. We're going to act like, though, there's no earnings coming up. Option trading strategy number 1, if we're bullish on Nvidia, is that we can place a bullish debit call spread. Let me show you what I mean. So currently you see Nvidia is trading for around $136 per share. So if we believe that over the next month or so, month to month and a half, Nvidia was going to go up in price, then we could do this bullish call debit spread. To do that, I want to take a quick peek at our chart because the stock's price, its support and resistance, they're important, especially if you're placing a debit spread. Now we're looking at the daily chart of Nvidia. Notice overall it's in a pretty nice uptrend. Although do keep in mind that right here we made a lower high and right here we made a lower low. See, this low is lower than this low right in here. And then we made another lower high right in here. But then it kind of reversed. We made a higher low right here. We made our higher high 3 days ago. So overall, Nvidia is looking okay when it comes to technicals. However, we do see nice big candles here, and the volume is pretty decent. Now, the market just opened a few minutes ago, so today's volume is very low. But overall, it appears that Nvidia is heading down to test this potential support right in here, which would put it right around $135 per share. So if we expect it to find support, just kind of keep that level in mind as we're picking our strike prices of our bullish call debit spreads. So remember, it's trading for about 136. We're expecting it to possibly find support around $135. Ideally, we would love for it to have already found support and be confirming that with some upward candles, but we don't have that yet. For the sake of this video, we're going to say, let's just assume that it's going to find support around $135. What bullish call debit spread would I consider placing? Well, let's look at this. So we thought the move would happen pretty quick, like in the next 42 days. I look at the February 21st options. Let's just play with some numbers here. So we're expecting it to possibly find support around $135. Now we're going to do a spread, which means we're going to buy a call and then sell a call. We're going to do that because we're going to be out of pocket for this position. So we want to sell another option, another call option farther out of the money to help pay for the option we're buying. You see, otherwise we'd have time decay or theta just eating away at our option. That could put the odds of our winning way down. So we want to improve those odds by selling a call option against the one that we're buying. And we'll use the same expiration date to do this. So we know that we're expecting Nvidia to find support around 135. Now again, that's not confirmed yet, so I hate even saying that because I'd rather say that after it has confirmed, but we're going to assume that it will confirm at 135. Where do I think Nvidia might go to in the next 42 days? I'm asking that question because I want to know where I should place the strike price of the call option I'm going to sell. We know it found resistance right here on 153, 154 a couple of days ago. So that'd definitely be a target I would aim for. So expecting possible support around 135, or expecting resistance around 154. So just kind of keep those in mind. Now let's put a potential bullish call debit spread trade together. I'm laughing because I keep messing it up. That is so hard for me to say. I don't know why. But here we go. All right, so February 21st options, they expire in 42 days. Let's play with some numbers here. So Nvidia is trading for around 136. Well, I'd definitely consider buying maybe the 140 call. So you see that call option would cost about $8.90 per share. And I want to sell a call option against it to help pay for that time decay or that theta. So what would I sell? Well, I'd definitely sell this 155. Because remember, we thought I'd find resistance around 154. But if I wanted a little more help, I might sell this 150. And for that, we get around $4.85 per share. So it's costing us $8.90 per share to buy that 140 call option. And we're getting $4.85 per share for selling the 150 call option. So we have a spread there of about $10. So it's going to cost us about $4.05 per share. Or for the 100 shares that each contract represents, it's going to cost us $405 for this position if we do one contract. And keep in mind that if the position goes our way, it'd be worth about $10 per share, or about $1,000. So our profit would be close to $600. And all that has to happen is Nvidia needs to be at 150 at expiration or higher. If that's the case, we get a nice win. That's a pretty good risk reward. We're risking $4.05 per share, and we have a potential win of about $6 per share. I like that risk reward ratio, especially if we think Nvidia is going to go up in price. And keep in mind, we're selling this 150 call option. So really, Nvidia even has a little more room if it tests its previous resistance, and our trade could still win. You can do this exact same trade really with any expiration day. When I'm buying options, I generally pick an expiration day that gives me enough time for the scenario to play out the way I think it might. So if I thought it might take a longer time frame, I can always switch these February options to March. And what's interesting is if I go out that far, it actually cost me about 10 more cents per share. So not a bad deal if I thought I needed more time to possibly win with this scenario. And if we just wanted a whole lot of time, we could look to do a leaps type of trade. We could trade the options that expire in 735 days from now. Now personally, I wouldn't do a bullish call debit spread with that expiration, but you get the idea. Pick the time frame that you think corresponds to how long you think it'll take the position to play out the way you're envisioning it. So a bullish call debit spread in Nvidia is a nice trade to consider if you think the option is going to head your way in a relatively short period of time. And one of the really big advantages to this type of trade is that you're capping your risk. You're capping it to that $4.05 per share, or $405 per contract that you saw if we did the February expiration. Now the disadvantage of doing a bullish call debit spread is that you really need the stock to go in your direction. In fact, if you do the math, it needs to go up by how much we paid for it, which is $4 per share. It needs to move that much on top of our long 140 call strike price. So in order for us to break even, we would need Nvidia to be at least $144.05 per share at expiration. So that's the disadvantage. And I always like, especially new traders, to check out the risk profiles you see here. It kind of shows you where your P&L will be at expiration. Here you have stock prices on the bottom here running horizontal. You have your P&L on the right. So just notice that if it's down here below this 140 per share, you lose $415. If it's up here around 150 per share, then you win $585. So nice way to look at your risk and reward on one graph. So that's one way you might trade Nvidia options, especially if you are very bullish on the stock. The second way we could look to use options to take a neutral or bullish position in Nvidia is to sell a put option or to sell a bullish put credit spread. Let me show you that. So we're going to take these call options off this chart. We're going to switch over to our put side. So let me slide this over for you so you can see all the option chains. And remember, we're thinking support will probably be around 135 per share. Remember, this is the option trade that I would not do through earnings. I typically don't like to trade options through earnings unless it's a specific strategy. So this is just a hypothetical trade. All right, here we go. So we expect support around 135. So where might we sell our put option? Well, if I'm going to sell a put option, I really want to make sure that I have multiple levels of support to help me out in case the stock slides. We know we have support around 135 as you see here. The next level of support will be down here around 127 or 128. Then below that, another support level is right in here around this 117 area. So if we want to be really safe, we might sell the 115 put. If we want to be a little more risky, we could consider selling the 130 put. Well, it's all about getting paid, so let's see if we can get paid for this. So that 130 put option that expires on February 21st in 42 days is selling for about $4 per share. So not bad premium. So we say we're going to sell that one and we get about $4 or $400 for the one contract. Now what I would prefer in a volatile stock like Nvidia is to not just sell a put option, but buy myself some protection. This is especially the case since Nvidia has earnings coming up. So we're looking to sell that 130 option. We might just buy some catastrophic insurance. If something wild were to happen with Nvidia through earnings, we want some insurance in case basically the house burns down. So we might consider buying the 100 strike price put option. And again, that's going to be worthless unless something really crazy happens through earnings. So here's what we're looking like. We're selling the February 21st. Option expires in 42 days. We're selling the 130 strike price, which is $5 below where we think its next support is. It gives us a little room to be wrong and still win. But we're buying the 100 put for just black swan event protection in Nvidia. And overall, we're gonna get about $3.60 per share. And here's what our risk profile looks like. Looks different than that bullish called debit spread, doesn't it? Notice that our reward is a lot smaller than how much we have at risk. So our reward is about $359 total for this position, but our risk is around $2,600. So not quite the same risk to reward ratio, but we're getting paid up front, and we can win if the stock trades sideways, goes up, and even goes down a little bit. So you just want to keep that in mind. Now, a third way you might consider trading in Nvidia is to combine these first two strategies I just shared with you. Now, I don't want to do this if I was definitely bullish on Nvidia. I wouldn't do this if I saw any type of bearish tendencies, but if you were bullish to maybe neutral, you might consider this next strategy. And it's pretty simple. It's like peanut butter and jelly. You're just putting a peanut butter sandwich together with a jelly sandwich. We're doing the first trade and the second trade as one trade. Here's what that would look like. So we have our put credit spread that we sold. We didn't change that. We just added back in that bullish called debit spread that we're going to buy. Now this graph looks a little more interesting, doesn't it? So we have our potential loss of selling that bullish put credit spread. And notice that it's higher because we're using that premium to buy the call spread. We have a nice potential win here of almost $1,000 if it goes up past our 150 strike price. The reason that's the case is that we sold that bullish put credit spread to pay for our bullish call debit spread. So I would consider doing this if I was pretty bullish on the stock. You obviously don't want it to stay around where it's at, 'cause you basically would almost break even. You lose a little bit because you didn't get enough from that put credit spread to pay for the bullish call debit spread. That's a lot of spreads put together in one sentence. I apologize about that, but I'm trying to describe it for you as best I can. This graph is probably the best way to describe it. You lose money if it goes down. You can lose up to $3,000. You have a nice win of around $1,000 if it heads your way. If it stays where it's at, you're going to lose a little bit. This is saying around $43 total. So that gives you two, or if you combine them, 3 ways to potentially trade Nvidia. Let's move on to strategy number 3. With this third strategy, we're going to go a little farther out in time. We're going to sell options that expire farther out than just say that 42 days. In fact, we're going to look at LEAPS options. All LEAPS options are options that expire in greater than 12 months from now. So here's a nice example of that. January 16th of next year. This option expires in about 371 days. So how might we make some money using LEAPS options? We might consider selling that same strike price put option. If we thought Nvidia would be above 130 per share a year from now, we might sell the 130 per share put option. We just go out to January of next year. And for that, it's estimating we get around $19 per share. So if you do the math here, we get around $1,900 for selling this put option. Remember that put option is at 130 per share, and Nvidia is trading for about 136 per share. Just keep in mind here, as you see my little trusty calculator, that you would need about $13,000 if this option were assigned to you. It's the $130 strike price, and each option equates to 100 shares. It's about $13,000 to buy this stock if it was assigned to you. Now, again, there's a lot of things you can do to prevent assignment. Let's just say it was assigned to you, that's what you would need. But you're getting $1,930 up front. So, not a bad gig. And if you wanted to buy yourself some protection while you're selling that 130 put option, you could always buy a put option well below there to cap your loss if Nvidia were to experience a sharp market decline. And I will do this in a stock sometimes, especially if I think it's been in a big decline and it might be bottoming out. And the goal is to close that option out early. So that's selling an option. Well, could you use LEAPS or options that expire in over a year from now when it comes to the call side? Absolutely. And here's what that might look like. So we go out to that same expiration date, January 16th, which is the option expires in 371 days. And we're going to buy a call option. When I do that, I like to buy an option that has a delta of around 0.7. And all that simply means is that for the next dollar that Nvidia goes up or down, the value of this option should go up or down around 71.7 cents per share. And here's what that trade would look like. We're buying the Nvidia January 16th of next year, so the option expires over a year from now. We're buying the 125 call option. Before that, we expect to pay around $3,800. And here's why I like this strategy. Remember, if we bought 100 shares of Nvidia, it costs us about $13,000. That's a pretty good chunk of change. However, if we take control of the stock by buying a longer term call option, it's only costing us $3,800. So if you do the math, we're saving $9,100 and we're still controlling 100 shares of the stock. Just keep in mind with a delta of only 0.71, the value of this option won't go up penny for penny if Nvidia goes up. but it should go up by about 71 cents per share for the next dollar that Nvidia stock goes up. I like this strategy. You're risking less, you still have the potential for a nice return. And as this option gets deeper in the money, that delta goes higher and higher. Now, another way I like to play these longer term call options is to turn them into poor man's covered calls. And just because it sounds like you have to be poor to trade these, that's actually not the case. In fact, I think they should change the name to rich man's covered calls because I think it's a very intelligent way to play options using Nvidia. So we're selling that option expires in about a year, the 125 call option. Why don't we sell an option against it? Let's collect some cash while we're waiting for Nvidia to go up. So what option might we sell? Remember we said we thought resistance was around 154? Why not consider selling the 155 call option that expires in 42 days? As you see, the last price is about $3.45 per share. And as long as Nvidia is below 155 on expiration in 42 days, the value of this option will be zero. So remember, although it costs us about $3,900 to buy this call option that expires in a year, we get $360 of that back by selling this short-term call option against it. But when you do this, you want to watch your deltas. Remember the delta of that call option we bought that expires next year, it was about 0.71? Well, keep an eye on the delta of the short option you're selling. That option's delta is about 0.28. So we're in good shape because the value of this option will only go up by about 28 cents for the next dollar that Nvidia goes up. But if this delta gets higher than the delta of the call option that you own, then you might want to consider adjusting the position. And I have a whole video series dedicated to leaps and poor man's covered calls or rich man's covered calls, whatever you want to call them. I have a whole video series dedicated to that. So if you'd like to learn more about them, just check that playlist out. I want to share with you one more little tip before I move on to my fifth strategy using options to take a position in Nvidia. And it goes like this. If you wanted a stock replacement strategy and you felt pretty bullish on Nvidia, then in addition to selling that call option that expires in about 42 days, February 21st, you could buy a call option that's in the money that expires on the same expiration day. Now, why might you do that? Let's say you didn't want to part with all this money here. Let's say you didn't want to risk $136 per share. You wanted to risk less, but you didn't want to be in this trade for a long time. Well, notice what's going on here. The delta of that $100 call option we're buying is at 0.96. That means the value of this option will go up or go down by almost 97 cents per share for the next dollar that Nvidia stock goes up or down. It's basically like you own the stock, but you're risking a lot less. Notice this option last traded at $41 per share. So you might do this if you wanted to risk less, but you still want to take kind of like a covered call or poor man's covered call in Nvidia. And of course, you don't have to buy the 100 strike price call option. You could buy something closer to that the money, which would put even less money at risk. But remember, as you get closer and closer to in the money, the delta of the call option goes down. That's really no problem right now because the call option's delta is only 0.28. And in fact, since the one you're buying is farther in the money than the one you're selling, which is actually out of the money, your delta will always be higher if it's the same expiration day for the in the money call option as compared to the one you're selling. This is a nice kind of covered call replacement strategy. You see, if this option ends up being assigned at $155 per share, then your other one will also be assigned. Just make sure your brokers do automatic assignments if they're in the money at expiration. The one negative to this is that if Nvidia were to be below $100 per share, remember you lose the value of this whole position, but you lose that same amount if you own the stock. So this is kind of like a covered call replacement strategy. Now there's one more potential trade I want to share with you, and it's one of my favorites. I like doing this type of trade in a company I believe has been experiencing a decline, but I think it is bottomed out and I believe it's undervalued because it gives you potential for a large win and you're risking less. You can do this trade with any expiration day, but for me, I like to go farther out in time when I do this type of trade. I do this trade in two steps. I first sell a put option at a strike price that I feel comfortable owning the stock if it came to that. Now remember I said I do this in stocks that I believe are undervalued but have been experiencing a sharp decline. I think that decline is kind of bottoming out. I think the stock might be primed to head up. Well, first what I'm going to do is I'm going to sell a put option. That gives me some cash in my pocket. And once I have that cash, I'm going to spend it on something. So what am I going to spend it on? We're going to slide over here to our call side and we're going to buy a call option. So we sold the $100 put option. Before that, we got around $13.60 per share. I'm going to see what kind of call option I can buy for that. So we're getting about $13.60 per share for that put option. What kind of call option can we buy for $13.60 per share? And as you see here, it's off the charts. I've gone all the way up to the $200 strike price call option, and we have to pay $26.55 per share for that. So what does that mean? Well, let's think about this. Nvidia is at $137 per share. So that put option we're selling is $37 below where it's trading at. Let's take that same $37, let's add that to what Nvidia is trading for. That puts us at $174 per share. So if option buyers and sellers were neutral on what they thought Nvidia was going to do over the next year, then the price of this option at $174 would be about the same price of the option that's the same distance away from Nvidia right now on the put side. So you expect the call option about $175 to be trading for that same $13.60 per share, but it's not. It's trading for a lot more. In fact, notice if we go up to 180, it's trading for almost double what that put option is trading for. That tells us there's a lot more buyers for call options than there are buyers for put options. So I'd play with this off camera here for a minute because this is pretty wild. So we're selling the put option at the 100 strike price and we get about $13.60 per share. How far up in price do we have to go in order to get a free call option? Well, I'm gonna slide this mouse way up and notice we have to go all the way up here to the 290 strike price. I mean, that is so far out of the money. Typically with a risk reversal, I sell a put option and I take that cash and buy a call option. Now in the case of Nvidia, what I might do, instead of just selling a put and buying one call, I might sell a put and then do a bullish call debit spread. So basically I have $13.60 per share to spend to buy me a bullish position using calls. And I found one that's pretty close. I could buy the 150 call, which is pretty good because that's not too far away from where Nvidia is trading at. Then to come out of pocket less money, I could sell the $200 call. Just keep in mind, I only be able to profit from the difference of $150 to $200 per share. That's still a pretty big profit range. It's about a $5,000 profit if Nvidia is above $200 per share at expiration. Remember, I'm basically getting that for free. I'm not really coming out of pocket any cash for this position because I've sold that put option that's far out of the money. Just keep in mind a little word of caution here. You sold a put option at $100 per share. So if Nvidia is below $100 per share at expiration, you don't do anything about it during that whole time frame, then the stock would put into your account at $100 per share. These risk reversal type of positions are ones I like to do in companies that have been experiencing a decline because generally the put options, they're paying more for those. So I'm selling something that people are paying more for and I'm buying a call option, which is cheaper because less people have been wanting to buy those call options. If a company is fundamentally undervalued in my opinion and appears to be trying to find support, I'll take a longer term risk reversal position like this. The sixth idea is one that I wouldn't do, and you probably know why after watching this video, but you could just do a covered call. You could buy 100 shares of the stock, then sell a near or longer term call option against it. But personally, I wouldn't do that. Just use options to take a similar type of position. And if you do it properly, you're risking less money than if you bought 100 shares of Nvidia. So now it's your turn. Which one of these strategies do you want me to use to place an option trade in Nvidia? In the comment section below, let me know which one of these strategies or ideas you want me to use to place the trade in Nvidia. When I make that trade, I'm then going to post it on my Patreon group, and I'll make it free for everyone to see, even the general non-paying public. And as the trade progresses, I'll post updates on it. So, what do you say? If done properly, using options against your favorite stocks can yield awesome returns while also minimizing your risk. If you'd like to get an alert whenever I buy stock or sell options, check out the benefits of becoming a patron down at the link in the description below. One of the strategies I mentioned in this video was risk reversals. They can yield awesome return and minimize your risk if done properly. If you'd like to see my risk reversal strategy, check out the video at the link above and the description below entitled Very Low Risk, Very High Reward Trading Strategy. Until next time, happy investing, and we'll see you again soon.